For a long time, investors have sought a way to earn money without constantly trading their time for it. The idea of passive income, where your money works for you, is incredibly appealing. And among the many ways to achieve passive income, one strategy stands out: investing in dividend stocks. But it raises important questions. Which dividend stocks should you pick? Can you even choose a few? And most importantly, can this type of investment truly provide the financial security you desire? Let's explore these questions together. In today's video, we've got something special in store for you. We are diving into the world of investing and unveiling the top 10 buy and hold forever dividend stocks. We will explore just how much you can earn from an initial investment of only $10,000. But wait, there's more. We will guide you on crafting a portfolio with these gems that not only promise a steady income stream, but also have the potential to supercharge your wealth over time. And in the end, we will reveal a strategy where even starting with just $200 per month can eventually put over $10,000 into your pocket every month. Before we dive into our top 10 dividend stocks, let's address a common pitfall that many investors stumble into: fixating on the current dividend yield. We will unveil the secret to avoid this mistake. While it's crucial to seek out companies with a solid history of consistent dividend payments, that's just the beginning. Here's the real deal. Dividend growth matters too. It's not just about where you start, it's about where you are headed. Why? Because as dividends increase over time, your investment becomes increasingly lucrative. So let's keep our eyes on the bigger picture, shall we? Now, let's jump into our top 10 buy and hold forever dividend stocks, sorted from modest to the highest dividend growth rates. First up on our list is PepsiCo, recognized by its ticker symbol PEP. This dividend has a remarkable track record, consistently increasing its dividends since 1989. That's an impressive 34 years of uninterrupted growth. While PepsiCo currently boasts a dividend yield of 2.68%, the real attraction for long-term investors like John lies in its 10-year dividend growth rate of 8.02%. Here's where it gets exciting. If you invest $10,000 today and maintain the stock for 30 years, wisely reinvesting his dividends along the way, your investment's value will soar to a whooping $108,287. That's an annual dividend of $8,266, roughly translating to a monthly income of around $689. What sets PepsiCo apart and makes it an appealing choice for long-term investors is its capability to maintain that forward growth rate. Over the past decade, PepsiCo has shown impressive consistency, with its dividend compounding at an average rate of 10.6%. Recent years have seen growth averaging about 9%. And here's the kicker: with a payout ratio of around 80%, there's ample room for future dividend growth. PepsiCo's strength lies in its well-established brands and robust distribution channels. It's home to some of the world's most renowned consumer food and beverage names like Pepsi-Cola, Gatorade, Frito-Lay, Quaker, and Tropicana. What's more, their top 22 brands each rake in at least $1 billion in annual sales, solidifying their status as consumer favorites. But that's not all. PepsiCo's strategy position as a dominant provider of both snacks and beverages makes it an indispensable vendor for retail partners, simplifying the shopping experience as a one-stop shop. So, investing in PepsiCo isn't just about dividends, it's also about tapping into the strength of iconic brands and smart positioning in the market. Moving along to our next champion in the buy and hold forever category, Ecolab, trading under the ticker symbol ECL. This dividend also has a stellar track record, consistently boosting dividends for a remarkable 30 consecutive years. Now, current dividend yield may seem modest at 1.13%, but don't let that deter you. For the patient investor, it offers a tantalizing 10-year dividend growth rate of 8.96%. Here's the exciting part. If you commit $10,000 today with diligent reinvestment and hold into the stock for a solid 30-year stretch, your investment's value will surge to a respectable $142,725. That's an annual dividend payout of $12,103, or roughly $1,008 per month. Now, let's explore Ecolab's core business. business. They specialize in selling a diverse array of sanitizing, cleaning, and water treatment systems. These solutions play a vital role across various industries, helping businesses maintain clean environments, ensure food safety, and optimize the energy and water usage. Remarkably, Ecolab caters to over 1 million customer locations spanning across more than 170 countries. So it's not just about dividends, it's about being part of a global mission to create cleaner, safer, and more efficient spaces. What makes Ecolab stand out as a premier dividend aristocrat for long-term ownership? It's all about its leading technology portfolio, robust consumer relationships, and a significant potential for growth. Now, let's explore our next top contender, the 3M company, recognized by MMM. This dividend giant boasts an outstanding dividend growth track record, consistently upping its dividend for an impressive 60 years and counting. Currently, 3M offers an enticing dividend yield, standing at approximately 5.52%, placing it among the high-yield stocks in the market. However, the allure doesn't stop there. It also boasts a highly competitive 10-year dividend growth rate of 9.33%. Let's do the simple math. If you invest $10,000 today, diligently reinvesting along the way, and remain invested for a solid 30 years, your investment's value will surge to an impressive $159,085. That translates to an annual dividend payout of $14,060, or around $1,168 per month. 3M's enduring success is a testament to its century-old legacy. With a rich history spanning over 100 years, 3M has firmly established its global footprint, operating seamlessly in more than 200 countries. So, what's the secret sauce that's kept 3M at the forefront for so long? It's their diversified approach. 3M is renowned as a wide-ranging industrial company, with a vast array of products under its belt, from cutting-edge adhesives to personal protection gear. What truly sets 3M apart from the pack of dividend aristocrats, it's its diversified product portfolio and robust global presence. This diversified product range spanning various markets bolsters its resilience, making it a standout performer even when compared to its peers. With 3M, it's not just about dividends, it's about investing in a powerhouse that has navigated through time with versatility and innovation. With 3M, it's not just about the dividends, it's about a legacy of innovation, consistent growth, and a promise of sustained financial growth for the savvy investor. Now, let's introduce you to our next stock, Nvidia Corporation, recognized by the ticker symbol NVDA. While Nvidia may be a newcomer to the dividend market compared to our other stalwart forever stocks, it has unquestionably made its mark with remarkable growth in the tech realm over the past decade. Here's where the intrigue lies. Nvidia currently offers a seemingly modest dividend yield, hovering at a mere 0.04%. This minimal yield often causes it to fly under the radar for many novice investors. But as the saying goes, appearances can be deceiving. For steadfast, long-term investors like John, Nvidia presents a compelling proposition with a 10-year dividend growth rate of 11.02%. Let's break it down. If you decide to invest $10,000 today and hold onto this stock for the next 30 years, this investment would blossom into a staggering $260,829. That equates to an annual dividend payout of $26,868, or approximately $2,239 per month. Nvidia may have a low initial yield, but its potential for growth is nothing short of impressive. It's a testament to the fact that patience and long-term vision can transform a seemingly small dividend into a substantial source of income over time. It's Gentleman's Finance channel. If you found any value so far, please like and subscribe. Next, what shines on a spotlight is TPrice, denoted by the ticker symbol TROW. This company boasts an impressive streak of dividend increases, a remarkable 36 years and counting. TRO currently offers an enticing dividend yield of 4.13%. However, here's where the excitement truly brews for long-term investors like John. TPrice promises a stellar 10-year dividend growth rate of 12.89%. Buckle up for the numbers game. If one opts to invest $10,000 today and stands by this stock for the next 30 years, his investment would flourish into an impressive $449,702. And that's not all. This smart move would deliver an annual dividend payout of $53,581, amounting to approximately $4,465 per month. TPrice is a prime example of a company that doesn't just offer dividends, it provides a path to secure financial well-being well-being and sustained growth for the discerning long-term investor. TPrice emerges as a star player in the world of dividend, and here's why it's a top pick for long-term investors. The company boasts formidable brand strength, underpinned by an illustrious track record of performance. What's more, it offers the added advantage of relatively low maintenance fees and possesses robust distribution channels. But wait, there's more to the story. TPrice ranks among the largest asset managers globally. They manage a diverse range of mutual funds, catering to various investment styles such as growth, value, sector-focused, tax-efficient, and quantitative approaches. In fact, a staggering 80% of TPrice assets are invested in stock and blended asset portfolios, with the remainder allocated to fixed income securities and money market portfolios. So, with a normalized payout ratio hovering around 72%, TPrice positions itself for an annual dividend growth rate of at least 10% per year, making this a compelling choice for investors who seek consistent and steadily increasing income streams. Now, let's dive into our next contender, the Costco Wholesale Corporation, with ticker symbol COST. While it may not boast the highest dividend yield around, this company's impressive dividend track record is turning heads. With a streak of raising its quarterly dividends for 18 consecutive years, Costco has firmly established itself as an appealing choice for dividend investors. Currently, the dividend yield stands at 0.74%, which some might consider relatively modest compared to other dividend stocks. However, it's crucial not to underestimate the potential here. For long-term investors, Costco promises a very respectable 10-year dividend growth rate of 12.96%. Now, let's talk numbers. If you take the plunge and invest $10,000 today, holding onto the stock for the next 30 years while diligently reinvesting, investment would burgeon to an impressive $458,944. That's a dividend payback of $54,957 annually, or approximately $4,580 per month. Now, let's shift our focus to a financial powerhouse, JP Morgan, recognized by the ticker symbol JPM. As a leading global financial service firm, JP Morgan Chase has garnered quite the attention of income-oriented investors. Currently, the company offers a dividend yield of 2.6%. While this might already seem enticing, the real appeal lies in the company's 10-year dividend growth rate, an impressive 15.1%. Picture this: if you decide to invest $10,000 in JP Morgan Chase today and hold onto the stock for a substantial 30-year period while wisely reinvesting those dividends, what awaits at the end of this journey is an investment worth a remarkable $853,354. That translates into an annual dividend payout of $116,556, or approximately $9,796 per month, a substantial and potentially life-changing income stream. JP Morgan Chase stands as a formidable asset for investors, adding a layer of security to their portfolios. With a storied history spanning over 2 centuries, it ranks among the world's largest and most venerable banks, boasting a rich heritage of financial expertise. JP Morgan operates across a different landscape, delivering an extensive array of financial products and services tailored to individuals, businesses, and institutions alike. Its sterling reputation stems, in part, from its unwavering commitment to maintaining a robust balance sheet, characterized by ample liquidity reserves. This financial prudence positions the bank to navigate choppy economic waters, whether due to downturns or moments of uncertainty. JP Morgan's enduring resilience in the US financial realm cement its status as a stalwart player. Its unwavering financial strength and impressive profitability inspire investor confidence, underscoring its status as a steadfast choice for the long term. Now let's talk about Abbvie. Abbvie, a big player in the pharmaceutical world, is a real dividend superstar. They've been increasing their dividend payouts for more than 50 years straight, earning them the title of Dividend King. Right now, Abbvie offers an impressive dividend yield of 3.96%, which is great news for investors. But what makes Abbvie even more exciting for long-term investors is its incredible 10-year dividend growth rate, a whopping 17.60%. This means that if you put $10,000 into Abbvie today and stick with it for 30 years while reinvesting dividends, you could see the investment grow to a jaw-dropping $1,545,682. And the best part, investors investor would be racking an annual dividend income of $239,061, which is about $19,922 each month. It might sound too good to be true, but that's the magic of reinvesting and having a robust dividend growth rate on your side. Now, let's talk about Visa. With the ticker symbol V, Visa has been on a 14-year streak of increasing its dividends, making it a solid choice for income investors. Currently, Visa's dividend yield sits at a modest 0.76%. You might think that's not much to write home about, but here's where it gets more exciting. The 10-year dividend growth rate is a whopping 19.02%. If you decide to invest $10,000 in Visa today and stay committed for 30 years, investment could skyrocket to jaw-dropping $2,636,157. And that's not all. You would be enjoying an annual dividend income of $447,022. That's roughly $37,252 coming in every month. Visa's dominance in the payments processing industry is undeniable. If you run a global payment technology network that smoothly handles electronic fund transfers between consumers, businesses, banks, and governments. This kind of market presence and dividend growth make Visa a star player for long-term investors like John. Last but not least on this list is Cintas, a somewhat lesser-known dividend giant that packs quite a punch. Cintas specializes in uniform rental services, making it the largest provider in the country. Their services extend to over 1 million business customers, spanning various industries from services to manufacturing. Now, you might think uniform rentals are a rather dull business, but here's where the magic happens. Cintas has some fantastic competitive advantages. If you rent out uniforms to workers, take them back for cleaning, and send them out again. This process generates highly predictable cash flows, which are a dream come true for dividend growth. Cintas operates a whopping 8,000 local delivery routes, ensuring dependable service and cost efficiency in every region they touch. Plus, they've been increasing their dividends for 30 consecutive years. Currently, Cintas offers a dividend yield of 1.08%, but when you peek into the crystal ball of a long-term dividend growth, it promises a jaw-dropping 10-year dividend growth rate of 21.8%. So, imagine this. If you invest $10,000 today and remain committed for 30 years, this investment could balloon to an astonishing $5,828,946. What's more, you would be enjoying an annual dividend income of $1,114,793, which translates to roughly $92,899 flowing every month. This is the incredible power of reinvesting dividends, but remember, it needs time to work its magic. In today's video, we've unlocked the treasure trove of knowledge about the top 10 buy and hold forever dividend stocks. But before we wrap things up, let's remember the critical lesson. It's not just about the current dividend yield, it's about the journey ahead. These stocks that we discussed today represent a path to financial security and steady growth. Whether you are starting with $10,000 or $200 a month, the power of reinvesting dividends over time can help you achieve financial freedom. Now that you learn how to build monster dividend portfolio, I suggest you check the next video I made for more motivation about how fast dividend investing can make you passive income. Don't forget to hit that like button, subscribe to our channel, and turn on notifications so you never miss another opportunity to grow your wealth. Thanks for joining us today, and we will catch you in the next video.